ed è per me un piacere e un onore dare il benvenuto al governatore Øystein Olsen, in visita a Roma, e ringraziarlo molto di aver accettato di essere con noi e trattare un tema così interessante per la discussione questa mattina. Vi do il benvenuto a nome anche dei co-organizzatori. Devo dire, abbiamo lavorato in team per organizzare questo evento con l'ambasciatore Grudland. Io lo ringrazio davvero perché è una sua iniziativa, l'ambasciatore di Norvegia qui a Roma, e con l'ABI che ci ospita, il dottor Gaggi è anche qui, quindi a nome anche loro do il benvenuto a voi tutti e all'ambasciatore ed in particolare al governatore. Le ragioni di interesse per questo seminario e per il tema che ci viene proposto sono tante. Io ne voglio ricordare molto brevemente tre. La prima è che il ruolo dei fondi sovrani in questa fase dello scenario economico globale è di estremo interesse. Sappiamo bene che c'è una ripresa in corso, la ripresa però è lenta, è diseguale nelle diverse parti del mondo, per alcuni è effimera, e quindi il ruolo degli investimenti e degli investitori nel sostenere la ripresa è al centro dell'agenda di politica economica a tutti i livelli. Ci sono diverse iniziative, da quelle delle istituzioni internazionali di Bretton Woods, la Global Infrastructure Initiative, a livello regionale in Asia, la nuova banca di sviluppo asiatica, il piano Juncker in Europa. Quindi credo che il tema rilancio degli investimenti e il ruolo che investitori istituzionali possono giocare per il rilancio degli investimenti è un tema centrale. La particolare configurazione poi del fondo norvegese, che è un fondo a capitale pubblico, ma che si muove però come operatore privato nel mercato privato dei capitali, questo è di estremo interesse. Quindi capire dall'esperienza di questo fondo, di capire come si possa fare per promuovere gli investimenti, specialmente la visione a lungo termine, capire se in quanto capitale pubblico un'istituzione come il fondo norvegese può prendere più rischi di altre istituzioni, credo sia un'esperienza di estremo interesse. La seconda ragione è l'uso delle materie prime nei processi di sviluppo economico a livello nazionale e a livello globale. Su questo voi sapete c'è un'ampia letteratura che parla della maledizione del petrolio, di oil curse. Allora quindi la questione è come contrapporre the Dutch disease, la malattia olandese, alla virtù norvegese. Ecco, quindi credo che da questo punto di vista non ci sia nulla di scontato, cioè che la Norvegia sia così brava nello sfruttare le sue risorse naturali con quest'occhio rivolto al futuro, non è una cosa scontata, anzi va contro, diciamo, le teorie economiche prevalenti che vedono nell'uso delle materie prime la possibilità di rent seeking, cioè non è un caso che il capitalismo nasce e si sviluppa in Inghilterra, nella stessa Italia, poi in Giappone, in tutte le regioni povere di materie prime che sono costrette quindi a cercarsi le materie prime aprendosi al commercio internazionale. La Norvegia è molto aperta al commercio internazionale ed è anche ricca di materie prime. Ecco, come fa? Ecco, quindi, si parla spesso del teorema del calabrone, no? Il calabrone è un insetto strano che non dovrebbe volare sulla base delle teorie dell'aerodinamica, ma che vola, e di solito si applica all'economia italiana, no? Perché come fa l'economia italiana ad avere successo? È un po' come il calabrone. Credo che in fondo c'è anche un calabrone norvegese, interessante, perché ecco, come fa il fondo norvegese ad essere così virtuoso? E c'è una serie di meccanismi che per noi sono di grande importanza. E l'ultima ragione, poi veramente mi taccio, è che è un grande investitore istituzionale che viene in Italia, che guarda il nostro paese, che investe anche nel nostro paese, e quindi da parte nostra c'è un grande interesse a capire che opinione ha dell'Italia, come ci vede. Ecco, noi non ce lo dobbiamo negare, abbiamo un problema a trarre investimenti dall'estero. In parte sono i nostri problemi, che peraltro adesso stiamo affrontando in una stagione, mi pare, un cantiere aperto di riforme senza precedenti. C'è anche forse un problema di comunicazione, noi non siamo molto bravi a far percepire, diciamo, quello in cui noi quello di cui siamo capaci. Ci saranno anche forse pregiudizi, non voglio negarlo. Ecco, Però anche qui la domanda è i consigli che possiamo chiedergli, cosa possiamo fare noi per essere attrattivi, cioè per essere valutati per quello che siamo. Noi non vogliamo essere valutati meglio di quello che siamo, vogliamo essere valutati però per quello che effettivamente siamo in termini di potenziale. Ci sono tante altre domande che io potrei continuare qui, ma io non sono qui per parlare io, sono qui per dare la parola all'amico Olsen, mi consente di chiamarlo amico, perché abbiamo scoperto che tra l'altro abbiamo ottimi amici in comune. Il governatore Olsen ha una carriera prestigiosa come economista in Norvegia, in America, come accademico, ma poi in Statistics Norway, che è una delle istituzioni statistiche più prestigiose. Ecco, io devo dire, quando facevo il direttore generale dell'Istat e poi presidente della conferenza dei statistici europei, ho avuto molte occasioni di contatto e ci siamo anche conosciuti e abbiamo anche lavorato insieme, molte battaglie comuni in quella stagione che per me ha un valore molto importante. Quindi una carriera prestigiosa all'Istituto di Statistica e poi al Ministero delle Finanze ed ora come governatore della Banca di Norvegia. Per tutte queste ragioni è per me un piacere veramente anche a livello personale, oltre che come FeBAF, di dargli di nuovo il benvenuto e di cedergli ora la parola. Grazie. Mr. Olsen, you have the floor.
Well, thank you for those words and that introduction, Paula, and also for giving us some ideas on topics internationally, economics internationally, and touching upon the theme I'm going to speak about here today. And also, from the start, let me thank you very much, the organizers, the ambassador also, thanks for giving me the opportunity to come here to Italy, to FeBAF, the Italian Finance Federation. In the following, since I have a well-prepared speech, let me introduce. I have a manuscript, so and given the setting here, I prefer to sit down here, and just continuing on underlying that it's extremely nice to be here for Norwegians in general. Always when we come to Italy, for me personally. We all Norwegians love Italy for its wine, for its food, its architecture, its history, its scenery, and a number of assets which have been managed by the Italian people for decades or hundreds of years, actually. Norway, on the other hand, as Paolo has touched upon, well, he didn't say that exactly, that we are not that much famous for our wine. I think it's fair to say that. We're not a wine producer. But we are, on the other hand, as already mentioned, it's fair to say that we have been lucky in other areas to be, and our country is abundant on natural resources. The management of Norway's currently most important natural resource, petroleum, as already said, is the main topic of my speech here today. And I'll be quite brief on the history. The history is actually about 45 years. And especially over these decades, Norway has transformed oil and gas resources into a significant financial wealth. Oil revenues are invested abroad through a sovereign wealth fund. The former name is the Government Pension Fund Global, but I and most people prefer to say the oil fund for short. It's much simpler, and that's actually what it is. It's based on petroleum revenues in general. And this financial wealth is managed by Norges Bank, the Central Bank of Norway. So my speech here today is intended to shed some light on how Norway's petroleum wealth has been managed. I will seek to explain how we see ourselves as a global financial investor, and I will also elaborate to some extent on the main element of our investment strategy. To put the Norwegian economy and our present wealth position into some perspective, let me start by going back throughout these 45 years. When the first oil was brought to surface, and that was actually in 1971, income levels in Norway were low. compared with a number of other Western countries. This picture has reversed since then. We have gradually caught up with the wealthiest nations, and measured by GDP per capita, Norway now ranks close to the top. And even excluding the petroleum sector, Norway's mainland economy has shown robust developments, especially throughout the last 2 decades. But there is no doubt that the presence of our oil resources, the oil activities, the impulses that is created by the extraction of oil and gas has played a major role. And given the high oil prices of the past 15 years in particular, or that is until last fall, a booming oil industry has been an important driver of economic growth in Norway. Last year, the petroleum sector accounted for more than 50% of Norway's exports and more than 20% of our GDP. And the high oil prices of recent years in particular have spurred investments in the petroleum sector to record high levels. The level of investments in the petroleum industry in 2014 was as high as total investments in domestic non-oil industries in Norway. And the positive spillovers to the oil service industry and other business sectors have been substantial over time, in particular, again, throughout the last decade. And in general, looking at overall total employment or unemployment, Norwegian employment has been high. There has been continued growth in employment, and unemployment has been low until now, even throughout the financial crisis in 2008 and 2009. To give you some impression of the significance of oil measured by the employment impulses, it's estimated that about 1 out of 9 jobs in Norway are linked, not directly in the extraction activities. Those are relatively few, but indirectly, directly plus indirectly, 1 out of 9 jobs in Norway are linked to the industry, the petroleum industry. Again, going back in time, it was established. It was decided and established at an early stage that Norway's oil and gas resources belong to the people, to the Norwegian people. So the tax system for the petroleum industry was designed to make sure that the bulk of the large revenues, the economic rent from the extraction of petroleum, would accrue to the state. Petroleum companies pay accordingly a surtax of 51% on profits, and that is on top of the normal corporate tax rate of 27%. The government also has a direct ownership share or ownership shares in the most profitable oil fields. However, policymakers' handling of Norway's newly discovered petroleum wealth got off in the early 70s to a rather bumpy start. What I'm saying now is that it has not been a continuous success story. There has been a number of mistakes, and there has been learning after that. During the first 25 years of oil production, Norway's experienced 2 deep recessions. Both downturns were rooted in hugely optimistic expectations on regards future incomes. In the 1970s, the public sector was the big spender, and the government had to tighten policy later on. Then, some years later, in the 1980s, a strong credit-fueled consumption boom in the private sector led to necessary cutbacks after the oil price plunge in 1986. These 2 episodes in particular of turbulence made clear how vulnerable a small open economy is to terms of trade disturbances, as well as short-termism and exuberant expectations. And as I said, there was learning. And to prevent the same mistakes from being made again, fiscal institutions were set up in the 1990s. Among the most important of these are the oil fund and the fiscal rule, which again is linked to the fund mechanism. And I'm going to elaborate briefly on these two institutions or elements. The Norwegian Parliament passed the act relating to the oil fund in 1990. Under the act, the net fiscal surplus, and that is including oil revenues, is transferred to the fund and invested in international markets. What I'm saying is that it's by law, when we got a surplus, a net surplus, overall surplus on the fiscal budget, by law, this surplus should be transferred to a new account, which is the oil fund, invested abroad. That's the simple fund mechanism. It's like a private rich person having a savings account. It's as simple as that. And a main purpose of this fund mechanism is to make the actual spending of oil revenues transparent. Towards the end of the 1990s, inflows to the oil fund increased, and there were expectations of considerable petroleum revenues, high revenues in the future. And it's also fair to say that there was significant political pressure to spend more. And in this climate, in a climate of high inflows and even higher expectations, it was quite demanding to restrain fiscal spending. And that was an ambition to, yes, it was reasonable to increase spending somewhat, but at the same time, there was an ambition to make some limits to the increased spending. And this was also very important at the time because, like many other countries, Italy including, it was clear that future pension obligations would be substantial. So on this background, economic policy guidelines were clarified in 2001 through the introduction of what is called the fiscal rule. Under this rule, under these guidelines, government spending of oil revenues measured by the non-oil budget deficit is limited to the expected real return on the fund. And this expected real return, it varies over time, but it was estimated at 4% annually. And the idea by spending the real return and not more in the longer run is to leave the overall capital untouched so that the capital itself is saved for future generations. That's the idea. The fiscal rule says that we could spend the real return of the capital, but not more than that in the longer run. And these fiscal institutions altogether proved to be well suited to manage the revenues from the petroleum industry. Even though most of the income was to be saved, it's also important to stress that the fiscal rule provided for a gradual but sustainable increase in petroleum revenues. On the other hand, this rule was not mechanical. There was discretion, which was underlined in the guidelines. So fiscal policy was not set on autopilot. The guidelines provided explicitly for counter-cyclical policy around the longer-term path. And obviously, this element in particular, the fund provided significant fiscal leeway during the economic setback in 2008 and 2009, where when fiscal policy in Norway was quite expansionary to counteract a downturn of our economy. I guess the difference is, to some extent, that we spent much more money, but we spent money we had, while a number of other countries, they were also forced to spend money they actually didn't have, so they increased debt. Let me now turn to the actual management of the fund. The Ministry of Finance holds the political responsibility for the oil fund. The overall management principles and strategy are anchored in the Norwegian Parliament, to which the ministry reports on a regular basis. And then the central bank, Norges Bank, is the agent which operates, which manages the fund by a mandate given by the Ministry of Finance. Our task as a manager of the fund is strictly commercial, and this is then underlined very explicitly in this mandate. And the overall aim is to maximize financial returns, of course, within the guidelines defined by the government. This structure ensures that the fund is not used for foreign policy purposes. And it's also very important to underline that individual investments decisions are made by Norges Bank, or more precisely by a special department in the central bank called Norges Bank Investment Management. And then Norges Bank, as an institution, as a manager, reports on the management, reports on the return, actual return, report on the risk profile to the ministry. And in addition to this, I would also take the opportunity to underline that Norges Bank, I would say, is by far the most important advisor to the ministry on future strategies. We're not the only advisor. They ask for different opinions from different groups, but I think it's fair to say that Norges Bank remains the most important among these. Then on the investment strategy. As already mentioned, our management objective is to achieve the highest possible long-term return, all within an acceptable level of risk. The investment strategy is developed by keeping in mind the fund's objectives as well as its key characteristics, which are the size of the fund and the long-term horizon. Those two are the most important characteristics. And let me elaborate on some important aspects which are related to these characteristics. The fund's purpose is to support long-term considerations in the spending of government petroleum revenues. Both current and future generations should benefit from the petroleum resources. Hence, the fund itself has a long-term investment perspective. This has profound implications for the investment strategy. Historically, real assets like equities have yielded more high return than nominal assets like bonds. Equities, on the other hand, have also proved to be more risky. However, the short-term variations in equity prices largely stem from changing discount factors or risk appetite, not from variations in income forecasts for the companies. And with the fund's long-term perspective, such changes in risk premiums are of minor importance. Thus, the fund has ample capacity to stand or bear this risk. And as a consequence, we have a relatively high equity share in the fund portfolio, which means that 60%, the share is 60% of the fund's capital is invested in listed companies, listed equities. Recently, a new asset class was introduced, that is real estate. The background is that this improves the fund's balance between risk and return. According to the fund's management mandate, up to 5% of the fund is to be invested in real estate. Real estate investments are currently concentrated in 10 global cities in Europe and in the US, but in addition to that, a large chunk is also invested in logistic property in various countries, including actually Italy. Property in major Asian cities may be included in the fund's assets during the present year. The fund's second largest asset class is bonds or fixed income. The purpose of the fixed income portfolio is to protect the value of the fund from heavy losses when the stock market falls and to provide liquidity. The strategic bond weight is currently 35%. 70% of the fixed income portfolio is invested in government bonds in developed markets. These investments are distributed across countries on a GDP weight basis. Let me point at another important element as a consequence of the fund being a long-term investor, and that is that the long-term horizon puts the fund in a position to be actually a counter-cyclical investor, and that is what I mean with this in a systematic way. And this is done by a formal guideline, which is again anchored in the mandate through a rebalancing rule where the equity share of 60% is rebalanced once the actual equity share is outside some margins. And according to this rebalancing rule, to be more precise, when the equity share increases to more than 64% of the fund, we sell equities and we buy bonds. Conversely, when the equity share falls below 56%, we sell bonds and we buy equities. And this strategy has actually proved to be quite profitable over time. It is estimated to have increased the average annual return of the fund by almost or around 0.5 percentage point. So far, the fund has earned an overall annual return after inflation and management cost close to 4%, which is a part of this fiscal rule. But to be more precise, it has earned an annual real return of 3.8%. The cumulative return on the fund in money terms is equivalent to more than 1/3 of the fund's total capital at the end of 2014. Then what about the future and the future return? Given the present environment, our opinion is that we could not expect similar high returns for the future. Let me elaborate somewhat on that and start by underlying that the starting point when we calculate the expected return on the portfolio is the real interest rate of high-grade government bonds. In recent years, bond yields in real terms, as we all know, have been close to zero. Low bond yields reflect global economic conditions. Governments, businesses, and households around the world are seeking to save more, while demand for safe investments has increased. Substantial asset purchases, QE policies by central banks are pushing in the same directions. Low yields may also reflect modest expectations of economic growth further ahead. Turning to equities, we all, as already mentioned, equities historically have yielded higher returns than bonds. And we also expect this to be the case looking ahead. But still, it is doubtful that equity prices will continue to rise at the same pace as in recent years. Weak or moderate growth in the real economies will, at some point, feed through the return on equities. The share allocated to real assets in general has increased gradually after equities were first introduced in the portfolio, and that was in 1998. Soon, almost 2/3 of the fund will be invested in real assets. As we gain experience in real estate investing, it may be natural to invest in other types of real assets or to increase the equity allocation further. In the longer term, a bond allocation, which is now, as I said, 35% in the mandate, in the longer term, an allocation to bonds of, say, 20 to 25% should be sufficient to maintain the funds needed hedged against fluctuations in equity prices and in order to execute the rebalancing strategy. Let me turn to the other major characteristics of the fund, which is the size. A main tool to manage the risk faced by the fund is diversification. With a fund of this size, and the size, which I don't think I mentioned that, is close to 2 times our GDP, and with a fund of this size, we have ample opportunities to diversify. Stocks in different companies in a variety of sectors, loan to governments and corporations, and real estate investments in a number of global cities are all parts of this portfolio. At the end of 2014, the fund has invested or has had investments in securities from almost 10,000 issuers in 75 countries. So the fund, I think it's fair to say that the fund is truly a global investor. Prices in financial markets carry information about the risk and return prospects of different assets, and the market are, let's say, fairly efficient most of the time. Hence, a natural starting point for the allocation across regions is the size of the different financial markets. However, the weights assigned by the fund to different geographical regions are in practice the results of a number of trade-offs between different considerations. Let me first turn to the important fact that the fund, well, being large, we are still a minority shareholder, and we are consequently dependent on good corporate governance and also protection of our rights in different legal systems. So regulatory conditions in investee countries must be stable, and we must be reasonably sure that our investments are safe. From the start in 1998, a large share of the fund was allocated to Europe. At that time, the emphasis was on exchange rate risk related to the trade pattern of the Norwegian economy. As European countries are, and they remain, our most important trading partners, Europe was overweighted compared with market weights. 3 years ago, the Ministry of Finance concluded that exchange rate or exchange risks had diminished, partly due to increased globalization. And consequently, the fund's overweight in Europe from that on until now has been reduced. At the same time, the allocation to emerging markets has increased. But still, if we look at the average owner share of the fund in Europe, in listed European companies, which it's still 2.5%, which is still about twice the ownership share on other continents. And to point at Italy, I think the average ownership share is slightly higher than the European average, actually, slightly higher. And about 2% of the fund in money terms is invested in Italy. This share invested in emerging markets, as already mentioned, is growing as these markets develop. Over the past couple of years, we have started invested in countries, just to mention a few examples, like Slovenia, Ghana, and Mauritius. At the end of 2014, about 10% of the fund was invested in emerging markets, but still close to 80% of the fund remains invested in North America and Europe, where still markets are the largest and also the most developed or advanced. Through the fund's investments in equities and bonds, we seek to ensure broad exposure to global equity and bond markets. In the management mandate, the Ministry of Finance has defined public stock and bond indices, which are used to benchmark our performance. These benchmarks are based on the FTSE and Barclay indices, respectively, for equities and bonds. So these indices are constructed to meet the need of a typical investor. What I'm not trying to explain is what kind of investors we are. Are we following the broad indices, or what's the extent of sort of what we can call active investments to exploit the risk appetite in the fund? And the answer is that we are broadly, since we are so large and we are diversified globally, our starting points are these FTSE and Barclay indices. But these indices, or sort of any global index, is constructed to meet the need of an average, or say a typical or an average investor. And we regard our fund to have some special characteristics. That is, we have some special characteristics which make us different from the average investor. And the investment strategy of the fund is actually constructed explicitly to exploit these opportunities, or to exploit these special characteristics of the fund. And the overall aim is all the time to seek to improve the overall balance between risk and expected return. So therefore, the actual portfolio will deviate from these indices along a number of different dimensions. And let me mention some important elements. First, we actually adjust for so-called free float. The free float of a company represents the portion of the company's shares that are readily available for trading. Shares owned by governments, employees, and company founders are assumed not to be readily available for trading. In the free float adjustment, these shares are removed from these public indices. But in our management of the fund, we use a different starting point. So we adjust. We may undertake some adjustments at this point to better reflect the relative importance of these companies. Second point is the duration in the fixed income index, and which in practice is determined by market dynamics. In the current low rate environment, index issuers have chosen to opt for longer dated bonds. Over the past year, the average duration in our strategic reference index has increased by more than half a year. In our actual management of the fund, we have chosen not to lock in low yields for a prolonged period and have consequently a lower duration in the fund compared to the index. Thirdly, the index providers exclude certain countries and segments in the construction of the indices for different reasons. As a result, the indices do not represent the full set of investment opportunities for a fund such as ours. And to give the fund higher exposure to global economic activity, we invest in some emerging markets that are not included in the indices. Fourth, as specified in the management mandate laid down by the Ministry of Finance, we have established environment-related mandates in the portfolio. And also, as also specified in the mandate, we take account of differences in fiscal strength between countries in the composition of government bond investments. Altogether, based on the kind of systematic adjustments indicated by these elements, a tailor-made operational portfolio is constructed by our special department. And this reference portfolio then serves as a basis for more traditional selections, individual selections of securities. The fund's largest holdings in terms of ownership share, both in equity and fixed income, are based on our analysis of the companies and countries in which we invest. Let me also mention that the large majority of the fund's investment decisions are made within our own organization. Still, from the start, we have always used external management companies in areas where developing in-house capabilities has not been an efficient option. Most of the external mandates have in recent years been directed to specialists in specific sectors or countries. Let me then underline that the fund is a long-term and also responsible investor. The objective of our management is to achieve the highest possible return at acceptable risk levels. Norges Bank work on responsible investing underpins this objective. As a long-term investor, we are dependent upon healthy and sustainable developments in investee companies and markets. And our work on responsible investments rests on 3 pillars. We promote international principles and standards and express our expectations as an investor on certain issues. We exercise active ownership through voting and engagements with companies. And we integrate environmental, social, and governance issues into the investment process and risk management. Promoting good industry standards is an effective way of safeguarding our investments and assets in the long term. Our efforts to promote high standards of corporate governance and sustainable business practices build on principles and guidelines developed by organizations such as the UN and the OECD. As a financial investor, the fund is affected by regulation of financial markets. We engage with regulators and participate in consultations on new regulations. We support the development of harmonized rules across markets. We express our expectations towards the companies we invest in through published expectations documents and direct engagements. So far, we have established 3 focus areas, which are climate change, water management, and children's rights. The documents set out our expectations of how companies should manage risks in these areas. The purpose of our interaction with investee companies is to support companies in their creation of long-term value. One of the most important tools on our part for exercising ownership rights is voting. And we vote at nearly every annual general meeting of the companies we invest in. As already mentioned, equal treatment of shareholders, including minority shareholders, is of paramount importance for us. Shareholders should have the right to nominate and dismiss directors, file shareholder proposals at general meetings, and approve significant changes to the capital structure of a company. Third element, we seek to identify, assess, and report on different kinds of risks to future returns by analyzing environmental, social and government issues. The aim is to gain greater insight into companies and portfolio risks. We look at issues that could have a significant impact on an individual company or on the fund's overall investments. So risk is analyzed at country, sector, and company levels. Negative external effects are likely to involve a cost for companies sooner or later, potentially through taxes or regulations. Based on our assessments of such risks, we may choose to divest from a company. On the other hand, we seek overweight in companies with positive external effects. All of these measures mentioned are part of our work on responsible investments. The overall aim is to establish a unified chain of tools that all support responsible investments as an integrated part of our management objective, the highest possible return. Let me mention also that a fund owned by the people or the government must be highly transparent, not only to the Norwegian public, but also in an international context. Transparency and disclosure of information is a key feature of the fund. All investment principles and guidelines, as well as strategic advice and second opinion reports, are made public. We publish quarterly reports on fund performance, which are presented at press conferences. The fund's annual report discloses a complete list of all investments held at the end of the year, and we also provide an overview of corporate governance work. Voting records from general meetings are published in real time. Let me conclude and round off. Altogether, looking back, we have been able to extract a large share of Norway's petroleum resources, let us say, at quite favorable prices. And we have transformed a portion of our petroleum wealth into financial assets. Norway's oil production is now well past its peak. High oil prices may also be a thing of the past. The fund is invested exclusively in foreign assets. The return we achieve on our investments is intimately linked to global economic developments. Current growth prospects seem modest by historical standards, so the return we obtain for the future may also be lower. Although the fund will continue to provide a substantial contribution to the government budget, the fund capital as a share of GDP may be approaching a peak. Accordingly, growth forces for our overall Norwegian economy will be more similar to those of other countries in the years ahead. Nevertheless, for Norges Bank, managing the oil fund in a profitable, responsible, and transparent way will be an extremely important task, and hopefully for generations to come. Thank you for your attention.
Thank you, Øystein, for this very comprehensive presentation, an inspiring presentation. I think we now understand better the secrets of your success. I would mention basically three things that really struck me. I mean, first of all, the importance of this long-term vision, long vision, Padre Schioppa would say, that really is able to see things in perspective and therefore adjust in terms of management strategies, concrete management strategies to very difficult environmental conditions like the ones we live in, with growing uncertainties, geopolitical uncertainties, low yields and low yield economy, and also possibly low raw material prices. So I think, how do you manage all this by keeping, if you want, your eye ahead of the curve and beyond the curve. I think this is the other thing is the importance of fiscal rules. I think this is and also I really appreciate what you said, that it's a learning by doing process. So there is no blueprint on that. But the fact that you not only have transparency, democratic accountability, but you find the right mix between democratic accountability and also independence of political short-term considerations, professionalism. I think this is a very important lesson that should be drawn not in defense of democracy, because I mean the democracy is the best system we know, but it's also flawed. And we know, I mean, there are a lot of people who do not vote, and the main ones, as you said, are the future generations. They don't vote, and it's so easy for current generation to take democratically decisions that put the burden on the shoulder of the future. So there should be rules, and I think the way you have managed it, I think it's also the idea of non-distorting the working of the market economy by investing abroad. So I think I could continue, but I think the way you have devised the fiscal rules that constrain democracy and give value to democracy, I think this is, in my view, extremely important. And finally, the diversification, keeping a global approach, I think this is extremely important at a time where we see that the shortfall of investment, the shortfall in infrastructure is weighing on the perspectives of the global and national economy. So I think if we want to bridge the gap, we need to have an approach in terms of diversification and global. But I mean, I could continue, but I want to leave the floor now to Edoardo Reviglio, who is really best placed in terms of giving his own view on what we have heard. He's chief economist. Edoardo non devo presentarvelo, è il capo economista della Cassa Depositi e Prestiti, un'istituzione estremamente importante, una banca promozionale, banca di sviluppo. Ancora devo dire sulle definizioni ci sono incertezze che ti fanno capire come un po' come il fondo si tratti di un'istituzione che è a cavallo tra funzioni pubbliche importanti di cui c'è il bisogno e però anche questa dimensione privata, perché il risparmio privato che loro gestiscono li mette sul mercato con le regole di mercato. E per cui ovviamente si tratta di istituzioni molto diverse tra di loro, con alcuni punti in comune, e quindi c'è un grande interesse, una grande attesa da parte mia, da parte di tutti noi, per come Edoardo reagirà a quello che abbiamo sentito questa mattina. Edoardo, you have the floor.
Thank you, Mr. Governor. Thank you, Paolo. I was just starting with, if you allow me to say a few words about Cassa Depositi e Prestiti, which in fact is a long-term investors. We are often called sovereign wealth fund, but we are not a sovereign wealth fund. We are called so by the press because they like it. We have an official denomination by the EU Commission. We are a national promotional bank, and we have a large balance sheet, which is around 350 billion, and our oil mine is the postal savings, which is about 250 billion, made out of 25 million small investors that invest in Cassa Depositi e Prestiti through a large network of postal savings. But of course, we are also attracting investments from the global markets. We are longer-term investors. We have 150 years. We were created in 1850. But in fact, we started going abroad only in 2008, when together with a number of the other large national promotional banks, the EIB, the German KfW, the French Caisse de Dépôt, and the Spanish ICO, we created a club of long-term investors club. And from there on, we started working very much on the concept of long-term, investing on long-term, as an anti-cyclical measure against the crisis, but also as a change of paradigm in political economy for Europe. And we went a long way in Europe. A number of documents have been have been created. I've come from Brussels yesterday, where they just created an intergroup of long-term investments. And also at the global level, finally, in St. Petersburg, at the G20, the concept of long-term investment has been put at the center of the new global agenda. We invest, as you know, in equity. We invest in large corporates. We support SMEs. We invest in infrastructure, both large infrastructure and social and smaller infrastructure. 70% of the infrastructure in Italy are medium and small and done by the local authorities. We invest in real estate and in heritage. We changed our activities and broadened up our activities a lot after the crisis. We do think that we have to be a major player as an anchor investors to attract investments from the global markets. In the next century, in the 21st century, there will be a huge demand for capital investments. So competition is going to be very high. Think about the emerging economies, China, India, Latin America. McKinsey recently calculated that China will build the city as large as New York City every year for the next 30 years. And India will build a city as large as Chicago every other year for the next 30 years. So we're talking about huge competition. And so we are very much looking to attract investments. And we started working and going abroad and talking with sovereign wealth funds, long-term investment, pension funds, insurance companies. They have assets around 90 trillion worldwide, and they invest in infrastructure, for instance, about 1–2%. So the idea is to increase by creating an asset class. So another big point is, and again, I come from Brussels, where we've been discussing the Juncker plan, is that Europe is trying to organize to create a market, a single market for infrastructure and SMEs support and corporate financing, which would weight as little as possible on public finance. As you know, we have a high public debt. We have very high welfare, state expenditures. We made a comparison with the US. As you know, the Obama plan made a big demand-side plan in 2009 was about 900 billion, and another one was announced last month around 500 billion again. The United States has half of the welfare expenditures that we have in Europe, pension and health. They have much better demographics than we do because of immigration policies. They spend about 17% in defense. We spend about 1.5%, and that's, of course, has a strong Keynesian high-tech effects. And they have the dollar. So they could afford to make such a large Keynesian plan. We believe that in Europe, this is not so easy. We have to be careful because so the idea of the Juncker plan and the idea of creating in Europe a single market which is capable of being very attractive is to try to attract capital, private capital from the global markets, long-term savings. And this you can do just by building a technically very advanced model of infrastructure financing. Think about project financing, which is now we finance only 10% of all infrastructures, and it could increase, and it should increase a lot. So from that point of view, together with the other national promotional banks and institutions, so they've been called within the Juncker plan, we participate to the Juncker plan as a first step to try to build within the European Union a very technically skilled and advanced. Of course, to do this, national European member countries and Europe in general need to go through a number of important structural reforms. As we all know, Italy especially is moving well now, but we need to do things in the regulatory framework, in the administrative burdens, in the procurement, in the justice. You know, a civil trial in Italy takes about 6 years, in the Netherlands 8 months. So that makes a big difference in terms of attracting attracting investors. But we believe this is also a first step to eventually then be able to raise debt or to think about Delors Eurobonds kind of programs. But at the moment, we cannot afford it. What I feel in Europe is a new wind. That is, we are moving towards a bit more of a demand side kind of economics, because we need that. But in order to do this, we do have to work together, and national promotional banks will have a key role. The EIB will be at the center of the whole plan. As you know, it's built on the system of guarantees, and the guarantees are aimed to fill market failures. So the concept of additionality is crucial within the Juncker plan. So the projects that could not be financed, that have market failure or could not be financed normally in normal times by the EIB, now they can do it if the Juncker gives the guarantee to do the enhancements of the projects. Of course, the projects will have to be validated by investment committee. There will be the EIB looking at the projects. That will give a guarantee that the project is eventually then bankable if the credit enhancement is given. Sorry if I got into a bit too much into the Juncker plan infrastructure, but it's something that we are very much interested in. Of course, we are also interested in attracting investments in equity and large corporations. Cassa Depositi e Prestiti has a strategic fund called, which is 8 billion fund, which invest in minority shares in medium and large companies which are strategic or have a high potential for growth. We have smaller funds for SMEs, of course, in private equity, infrastructure, greenfield and brownfield. As I said before, we work on getting good projects taken off the grounds. The government needs to work on making the environment, institutional and market environment, right. There's another pillar which is still missing, we believe, is the prudential accounting standards, which are not very friendly to long-term investments in Europe. And I talk about CRD4 for the banking system, and I talk about Solvency II and Omnibus for insurance companies and eventually for pension funds. So we still believe that some recalibration on the accounting standards is necessary. Europe has been more penalized than other regions in the world, which are, as you know, we are a very strong bank-oriented financial system, much less than the United States, which is a market economy, which is a very large capital market and a smaller bank system, but of course also like a government-based banking system like China. So Europe needs to understand that global competition in the 21st century is played also on the quality of their financial systems, and this is also playing also around accounting and prudential standards. Stability is very important, but of course you cannot hinder on the capacity of the banking system to invest in long-term investment and the real economy. So this is a bit the framework around which we work. Very last point I wanted to make is, again, talking about the changes in the European economic policy and in the Juncker plan, the concept of additionality, which means you're going to finance projects which have market failures, is putting a change in the state aid policy of the European Union. As you all know, we started with a competition and stated discipline at the center to have convergence of economic systems and firms. And this has been positive and to some extent, but not completely positive. And the leveling playing field that we expected did not happen really. So today, an Italian firm, in comparison with a German firm, pays 200 or 300 basis points more the cost of funding, pays 30-40% more in energy, has bureaucratic costs which are higher, and so probably having a different view on state aid based on this concept of additionality, that is, European Union, not national state, European Union is going to help or going to try to take off the grounds those projects which have market failures without looking into each project in terms of state aid, tough competition policy, is something that we feel is changing in Brussels, and something that probably help European economies to be stronger, because we really need to do so in considering the tough competition on the global markets that we will see in the next few decades. Thank you very much.
Grazie, Edoardo. I would also be interested to hear what the governor thinks of the Juncker plan, and also in responding to some of your comments. But the governor has accepted to take a few questions, so please raise your hand. I think we have a microphone, and so if there is any question, you can ask a question in English or in Italian. So I think, and I would propose to try to collect a few questions and then give the governor an opportunity to respond. We have a few minutes, so I think we have first gentleman then here.
Yes, hello, Governor. My name's Gavin Jones. I'm from Reuters. I don't know if I may ask a question that isn't directly related to the oil fund, but it's about the Norwegian economy, and there's been the most recent data suggests a slowdown in that suggests that housing prices are cooling, and I wonder where you think house prices are heading in the next in the coming period. And if I can ask one more question, at the last rate meeting you said you indicated an almost 100% probability of a rate cut in May or June, I understand, if things developed as you expected. I wonder, are things developing as you expected at that time?
Thank you. I have three small questions. One is, in terms of diversification, do you invest in the oil industry? I wonder whether you don't invest in foreign oil industries, because in a global diversification of risks, you may think that these will add risks, because the fund is, the engine of a fund is your own oil industry. Second thing, I was curious about how sophisticated is your financial investment. For example, do you include in your operation derivatives operations, or you don't? And finally, I didn't get whether, because of your expectation of lower returns in the future, which I fully agree with, is the Parliament thinking of correspondingly reducing the rate, the 4% rate, and so reducing the annual contribution to the budget, or not? Thank you.
I think you have enough probably on your plate. You should probably respond now.
Well, thank you for the interesting. First, from Eduardo, the comments or your elaboration on the Juncker plan. Let me just very briefly address that, because I couldn't be. I should be very brief, because I learned by your interventions on this plan. So I don't really have any comments apart from that. It's always interesting to hear about, and if the developments in Europe go in the direction of sort of improving systems, making markets even more open and transparent, improving or adjusting accounting rules in good ways. All improvements in these areas are important for an investor, for say an outsider. We are part of Europe, but at the same time, Europe is a foreign market for investments, for investing in the oil fund. What I could comment, I could supplement, have an additional comment on. You mentioned the need for making funds and capital available for real investments in particular infrastructure. We realize that in many areas we hear and we have the impression that there is a need now for improving infrastructure in the major industrialized countries like the US and also in the Euro area or in Europe in general. That is interesting. That is particularly interesting for the fund in the sense that so far, although the mandate does not open for investments in infrastructure, but it's part of the discussions that take place presently on our part within the bank. We could end up with providing a sort of a new advice in that direction. The government has also signalized explicitly that this is an issue. This is a possible new asset class that could or should be available for the fund. So they are looking into this issue now. Norges Bank, the central bank, is prepared to provide an advice on this in this area during, say, at least during this year. So it's definitely an option, and it falls into the strategy, the perspective I mentioned in my introduction, namely that with the present prospects for returns on bonds, 35% seems too high, given also that we really could act as a long-term investor and be patient and live through cycles of different kinds. And then the next question is, should we then increase listed equities, that kind of share, or should we progress or increase the shares in unlisted areas such as real estate or even infrastructure? And obviously, without going into details regarding risk profiles now, there is infrastructure has also some special characteristics, even if you compare it with traditional real estate, although there are some borderlines between real estate and infrastructure projects. We all know that. So that's what was happening there, and if the governance structure and the general environment around the financial market in Europe is improved through this plan, specifically in this area, that's interesting. But thanks again to Eduardo. Now, from the question, you were from Reuters, sir, yeah. To some extent, I'm prepared on that kind of questions, given the last two decisions from Norges Bank, from the central bank, first going back to December when we cut rate. Our target rate, just to inform the public, the audience on that, is not zero. It's low because interest rates generally are low. That feeds into our present interest rate situation. So interest rate was lowered in December last year from 1.5 to 1.25. The background for that was the slowdown in the Norwegian economy, and particularly the slowdown was accelerated by the fact that oil prices were cut to half, which has if that prevails, will have significant consequences for the economy. So that was the major background. We cut rates to sort of seek to safeguard for a more marked or more dramatic slowdown. We didn't really know what's going to happen in the future, so we were early. We were quite early, we thought, to safeguard towards a more dramatic slowdown. Now that hasn't happened. If you go from December to March, when we made our most recent interest rate decision, Unemployment has has remained low. It's close to unchanged. So in March, we did two things. We reduced further our interest rate path because we present a complete set of forecasts, including a path for the interest rate. So that was reduced. So the most likely development regarding our rate is going in that direction. But in March we waited. We took a halt in our decision. So we kept at that point we kept the rate unchanged. So we had the option to wait and see. That was the sort of in brief terms the philosophy at that time. But you're right in your question. Along this path of the interest rate which we presented in March, if things go exactly from March and onwards as we saw it then, yes, then you could foresee a further reduction in the rate in May or June. That was the picture we drew out in March. But I couldn't at this point, as I guess you expect, give any new signal now in between these meetings. And I just you characterize that as 100% sure that we would decrease rate. No, that's not the case. This scenario and this forecast is only one possible scenario. It was our most likely scenario for the rate. The actual risk pattern is always quite wide along or around any forecast that is made by a central bank or by statistical institutions or by anybody. So I couldn't. I'm not underwritely agree on your wording on that. Now on the questions from the person over there first on the investments, whether we invest in oil companies, international oil companies. That was the question? Yes. Yeah. Foreign oil companies, whether we invest, and the brief answer is yes. We have in money terms significant investments in foreign oil companies. So I do understand the potential arguments underlying your question, whether it from a sort of macroeconomic diversification point of view, taking also into account that the basis for the fund is oil, and we could have some future inflows from our future revenues also into the fund. I'm perfectly aware of the argument that you could argue for even broader macroeconomic diversification. That issue has been addressed in particular by the government in several times, actually also in this white paper which the government at an annual basis presents for the parliament. It has been discussed. The issue is relevant, but I think the answer from the Minister of Finance was that it's not very important. It's not a very important overall diversification for the overall Norwegian economy. And obviously it has some practical consequences also if we should go in that direction. But that is a decision by the government. So, and by the present mandate, we are definitely allowed to invest in oil companies or in energy companies in general, and we have substantial investments in the area. Now, on your second question. Yeah. I'm sorry. I actually have noted that as well. Could I come back to that? Sure. Yeah. You asked whether how advanced or the investment process is. the short answer is it's quite advanced. I hesitate to give you all the details because I have to check by the experts. But yes, there is some leverage undertaking taken in the investment process. Yes, I think we exploit the derivatives of some kinds. But I hesitate to give you the exact answers on that. I could come back to you on this issue. The third element of your question was to the authorities, whether they have sort of considered to bring the 4% figure in the fiscal guideline in accordance with what could be expected in the future. The central bank and myself, I have actually said that publicly a couple of times, that 3% is more likely if you, in real terms, for the future than 4%. But then I fully respect it's a decision by the government to sort of change the guideline, the formal guideline, which they have not done so far, and it remains to be seen what they're going to do in the coming months. There is a publicly there is a government-appointed committee now, which is appointed to evaluate this issue, this question, and some other elements of the fiscal rule. They are going to come with a report to the government or to the Minister of Finance in June, I think, this year. So we'll see. I think there will be some change. Change is made, but I don't know which. I should also add that they have not changed their formal rule to 4%, but they have actually adapted. They've actually, the actual spending now is 3%, or actually somewhat below 3%. So they have hesitated to follow the advice formally, but they have actually done it in practice. So that could be more important. Now on housing prices, of course we follow housing prices closely. The recent number, housing prices in Norway, again to the audience, not surprisingly, given the strong growth in the economy that we have experienced for a number of years, housing prices have been sort of booming. We have, except for some adjustment in 2013, well, first in 2008, 2009, but then a small adjustment in 2013. Housing pricing we have experienced strong growth in housing prices. That price increase, steady price increase, has fueled credit growth by households, which is not accelerating, but is higher than the income growth by households. And that could not be sustained on a longer-term basis. So with that, yes, this is a worry by the central bank or by the authorities in general, and we follow housing prices closely. In monetary policy, it's also correct to say that to some extent we are leaning against this wind. We realize that sustained low interest rates fuel the housing markets, and fuels credit, and fuels borrowing, lending. So we are to some extent keeping interest rates slightly higher than otherwise would have been the case. So we are leaning against the wind. Let's wait and see. The recent number from the housing market was not higher than we actually projected in March. Now, again, consistent with this overall set of forecasts that we have presented, we expect the most likely path that we see for the housing prices is that there will be a dampening of housing prices looking forward. We don't see a fall in housing prices along this set of forecasts, but we think there will be a dampening of growth in the housing market, and the recent figure was consistent with that. Thank you.
Another round of, we have a few minutes for one or two more questions, if are there. Yes, I mean, there was a question here.
Hello, I'm Luca Battaglini from Intesa San Paolo Banking Group. Can you expand a little bit on you said that the equity share, if I understand well, was going to rise in your fund portfolio. And how do you plan to raise this equity share regarding especially new issues, the new issues of equities compared to equity already outstanding on the market? Are you particularly interested in new companies quoting, maybe in Italy as well? Thank you.
On the equity share, again, just to repeat myself, by now it's 60%, and again, looking ahead, we think that 35% in bonds is too high, and if that's going to be reduced to say 25%, the share in real assets, either real estate, infrastructure, or equities, would have to be increased. And equity, an increased equity share is one option. But there is no decision by the ministry, and nor any final advice from the central bank either so far. But that's going to be an issue which we're going to look into. Now, whether on your question on whether we are looking, we are allowed only to invest in listed companies. So that's the answer on that part of your question. There are some exception when we are allowed to invest in a company which is where there is a plan for moving into the stock exchange. The term is called IPO. The term, yeah, okay. So there are some exceptions, but apart from that, we are only invested in listed companies. But new companies or new shares are as interesting as the old ones. I would say in general.
Thank you. I think we have exhausted, actually we have gone beyond the time that we had allocated for this meeting, and concluding remark, I can only say that we are extremely satisfied with the outcome. I think we should pay a tribute to the excellent idea of the Ambassador Grudeland and to your kindness in visiting us, and definitely was an interesting session. Also the question and answers were interesting, and so we do hope that you come back soon to Italy and we continue this dialogue, which is certainly extremely interesting for all of us. So thank you very much, Øystein. I think we should conclude with a big applause.
Okay, thank you very much.
The governor.